If they can make it work, I'm perfectly happy for it to come out, but it can't be out of there on the road. This is the worst piece of software.
At least for now, Tesla is still dominating versus some of the other EV makers out there. So how sustainable, though, is the demand side of the picture? As you mentioned there, so many more people coming into the fray with potentially cheaper models, too.
The good news could keep coming, as we did get reports that indicated that the company may have achieved a strong second quarter.
We got all that and more, but first let's go ahead and take a look at how Tesla stock's been doing. For the day, Tesla up a mere 0.5%, closing around 257.50. We got a lot of consolidation around this area simply because the stock market is waiting to see the numbers that Tesla plans to release over the weekend. Year to date, the stock is up 138%, causing many on Wall Street to have a little bit of pause. Not me. In addition to my September 15th call that I have in place, I just dropped another $12.75 for a call that will expire July 14th with a break-even price of about $267. In addition to the delivery numbers that should be released this weekend, I expect there to be a nice ramp up leading into earnings. And hopefully I can make a pretty penny.
Joining us now are the two people who were in that car in the video. Ross Gerber, Gerber Kawasaki president and CEO. He's also a Tesla investor and former board member. And Dan O'Dowd, founder of the Dawn Project. As we mentioned, Dan has been a longtime critic of Tesla over self-driving technology. He's been in a battle with the company over it.
If you venture over to the dawnproject.com, the first thing that pops up is the immediate dangers of full self-driving beta. Feel free to fall down that rabbit hole of hate and vitriol, but I just want to let you know where we're coming from. Dan O'Dowd is a man that detests Tesla's full self-driving software, not because it's unsafe. No, that's just the guise. Dan O'Dowd is also the founder of Green Hill Software. What is Green Hill Software, you might ask? Just by looking at this page here, you might come to the conclusion that Green Hill Software is a competitor in the automotive software space. Imagine that, somebody with invested financial interests slinging mud at Tesla for potentially putting them out of business. And what do you know? There's our man Dan right there, President and Chief Executive Officer. But I don't want to put words in his mouth. Let's go ahead and hear what Mr. Dan O'Dowd has to say, along with our hyperbull Ross Gerber.
Very much for joining us. Since we know Ross's position in the stock, Dan, just to lay the table here, are you short any shares of Tesla or have any financial ownership or relationship here?
Nope. No, nothing, no shares, no puts, no calls, no anything.
All right. Starting off smart. Good job, Dan. We're not going to go ahead and say he's got a competing software company in Green Hills. You already know that. But, it's interesting that they left that part out, that he has a competing company in this space. But, let's continue.
In your bio, it says, your sort of goal is to see full self-driving eradicated. Why is that?
Well, not eradicated necessarily. If they can make it work, I'm perfectly happy for it to come out, but it can't be out of there on the road. This is the worst piece of software I've ever seen in a safety critical product.
Worst software? Holy smokes, coming out the gate hot. All right, you can see in the street cred that Dan O'Dowd is Green Hill Software CEO. So I guess it's his job to badmouth other software companies, especially when they're doing what you can't do. There's gotta be a reason why you're gonna play second fiddle if you continue down this path. Let's hear it.
Safety defects that are simply intolerable, and it is not converging on success. They're not fixing the problems. They're still there. 7 months ago, I told them that a FSD would blow past a school bus with the red lights flashing and the stop sign out. I showed it to them. They didn't do anything. In February, I made a Super Bowl commercial showing this exact same thing, and they ignored it. And in March, a kid in North Carolina stepped off a school bus, and a Tesla on self-driving Tesla ran past the flashing lights and ran the kid down and put him in the hospital, and he still is not fully recovered.
All right, slow down, Dan, slow down. FSD Beta has warnings that notify the driver, who is ultimately responsible at this stage of the game, whenever there's something that goes wrong. So you take over. If you're blowing past a bus and you know you should stop, you take over and you notify Tesla. Report the bug. That's why Tesla didn't answer your Super Bowl ad personally. They get the data from these vehicles in the moment. Regardless of whether or not it was FSD Beta or autopilot and a kid got injured, it is the responsibility of the individual behind the wheel. At no point does Tesla say, go ahead, kick back, chill, relax, watch a movie. I got you. Never. Dan O'Dowd's concerns would be valid if this was no longer FSD beta and this was just full self-driving.
The fact that it blows past school buses it's insane. Nobody would build a product like that. It is totally irresponsible.
Ross, did you get Dan in the car? How did this car ride happen here?
Yeah, Dan agreed to go in the car, and so we went up to Santa Barbara and met with him, and I let him pick wherever he wanted to drive as long as it was a real drive in a real environment, and he said, drive me to the office. So I said, okay, fine. So we got in Tesla, I engaged full self-driving, and it drove us to the office perfectly. You can see it all in the video. We went through 13 stop signs, 8 humans were avoided, and 6 construction workers in a construction site. We went by fire trucks, schools, and everything, and the drive was perfect. And in fact, really the challenge that Dan is dealing with is the fact that his entire narrative is false. And everything he's saying is a bunch of garbage. The worst part of it is he's saying I'm blowing a stop sign that we didn't even blow. And I was driving. So if he really cared about people's safety, he would actually focus on the real things that need to be improved with full self-driving, which there are many, which he hasn't mentioned once. Just a bunch of false information and all this hyperbole and big words for software that's phenomenally good, and you can see it in the video with Dan sitting right there.
Woo! Dan, you didn't come out hot enough because Ross is spitting that fire right now, boy. Now, if you haven't experienced FSD beta, you probably don't know this, but it started out real rough. Progression from just a year ago has increased consumer confidence so much that now Tesla is accumulating millions of miles every day on full self-driving beta. As a competing company, there's no doubt. Dan O'Dowd shit bricks. That interview right there got pretty heated. It went back and forth between Ross and Dan, and even some of the commentators kind of got in it. They're looking at it from a lens of a level 5 autonomous vehicle, when in actuality, they're not there yet. No one is there yet. You can look at Waymo and Cruise and see how many of their vehicles are just garbage. It's a 50-50 coin toss. Tesla is working on a generalized solution, and they're the only ones accumulating real-world miles driven with this software.
Speaking of another founder here, on Tuesday, Volvo announced that it would be the latest car company to join Tesla's charging network, following in the tire tracks of Ford, General Motors, and Rivian. But Wall Street is keeping a close eye on the EV leader after some bearish calls. You see, a series of recent downgrades of the stock begs the question about Tesla's current valuation and what these partnerships could mean long-term for the company. Let's get another take from Roth Capital Partners senior research analyst Craig Irwin. Craig, good to have you on the show.
My favorite bears in the finance media. Let's hear what Craig Irwin has to say. Maybe he can provide a little more insight so that we can have a measured approach on how far Tesla has to roam.
What do you make of what we've seen here with a lot of these downgrades, but still seeing these raised price targets?
Well, what's going on is that the stock has performed incredibly well this year. There was a very tough ending to last year. They cut prices, and those price cuts were successful in reinvigorating enthusiasm on the sales side. And then you layer in the success of NACS, the Tesla charging protocol standard connector, being adopted by many of the leading OEMs. So, they've had some real wins. And the valuation has taken off like a kite, from close to $100 to 250 plus is a big move. So people are, I believe, just really being reactionary. I've maintained my long-term bearish stance. It's a great company. They played a huge role in transforming transportation, but you've got 100 new EVs coming to market. These big names you mentioned, Ford and General Motors. There's lots of old guard that's coming in with pretty compelling vehicles that I think is going to compete effectively and make it harder for Tesla to see the growth and the margins that they've been achieving going forward.
Well, same old from Craig. Nothing really new there. The competition is coming. 100 new models coming in within the next couple of years. There's no way Tesla can keep these margins. It's not like they don't have any technology that any of the other legacy OEMs can duplicate. I don't know what allows you to believe that. Craig always says glowing things about the company. He realizes that the execution of Tesla is phenomenal.
And I mean, at least for now, Tesla is still dominating versus some of the other EV makers out there. So how sustainable, though, is the demand side of the picture? As you mentioned there, so many more people coming into the fray with potentially cheaper models too.
Yeah, so what's been proven out actually is that demand is really price sensitive. So Tesla's cut certain models as much as 30%. So, consumers respond, when there's big price changes, they do respond. EVs have been expensive because batteries have been expensive. There's been a lot of progress bringing down battery costs, but the capabilities really haven't been improving as quickly as people had hoped. As these things make progress over the next many years, it's inevitable. You're going to see continued fantastic adoption of electric vehicles. But demand is weak. Demand is a little choppy in this environment, which is why Tesla had to go out there and cut prices as aggressively as it did.
And so how do you think sort of getting more partners on board with the supercharging network and that infrastructure and the revenue that might come from that, does that put it perhaps in put a bigger moat around it, I suppose?
Yeah, so, they have been, roughly 80% of the North American market, dominating globally, and deserve full credit for that. A large part of that success was actually the supercharger network. The Tesla drivers charge on average about 15% of their miles driven on DC fast chargers, on these superchargers. The rest of the EV drivers in North America do about 5%. So their network is something that gives their customers a lot of comfort. So, it's also, a multiple of the size of everybody else's networks, the private networks. So General Motors and Ford and everybody else jumping in and signing these agreements to gain access to that is very positive for them, positive for adoption. We don't know how much their customers are actually going to end up paying versus Tesla customers. And, I think there is some potential impact to the Tesla brand. You're not really going to be enthusiastic sitting online to charge your vehicle behind a great big Hummer. It's going to take 2-3 times as long to fill the batteries.
I don't think we got to worry about Hummers. I mean, maybe in 2028 there might be 1,000 Hummers on the road. Maybe.
They probably do make some money on this, and that's a fantastic thing. That's what capitalism is about. That's what drives investment. But I look at Tesla, I say it's egregiously overvalued, but man, what a fantastic pioneer to drive this industry forward.
I mean, and speaking of pioneering, we have to talk AI here. A lot of big bets coming from the AI side when, Elon Musk talked about, buying more chips from NVIDIA and really trying to get ahead of this. How much of that is also factoring into the fervor, and how much of that is sort of well-founded at this point?
Yes, so the institutional investors usually take that with a grain of salt. I mean, they trade it like retail investors. So there's, retail is a very large part of the trading and trading direction, trading velocity in the stock. But the big institutions all know that, on a relative basis, the importance of AI to Tesla is moderate. The full self-driving capabilities are really a misnomer in my opinion. When you look at the rate of these false stops, the apparitions, when you're driving these vehicles, 1 to 4 or 5 a mile, and you think about those actually causing accidents, it's beautiful that they're pushing hard to develop the technology. I just think that others will be more careful in introducing things into the market. And, Tesla's going to make other people go faster, but the profit opportunity from this AI, I think, is much more limited for Tesla, at least at the moment.
The competition is coming. Demand is wavering. And sure, Tesla's leading right now, but NFL, baby, not for long.
Sort of the near-term uncertainty versus longer-term. Would you say this is more of a bull run or a bull trap? How should investors be looking at this?
Well, it's definitely not a value trap. Maybe a bull trap is the right label. A lot of investors trade as momentum investors and are in this stock, and correctly selling into strength, in my opinion. And then buying on weakness. I'm not against that kind of trading strategy. I do think that, if some of these concerns about the battery source for the rear-wheel drive Model 3, their highest volume vehicle, switching away from a Chinese source, that's a question mark. The impact of competition. Some of these other networks quite probably do better on a relative basis on the charging side than Tesla. given Mr. Musk's political posturing. A lot of investors are acutely aware of this and watching closely. And as this evidence comes out, you can expect, some significant volatility in the stock. Goes up quickly, will go down equally as quickly. And we're cautious. We think people should be aware that that's a significant possibility, over the next number of months.
Well, he ain't never lying about the volatility. The rest of that is quite gibberish. I'm not concerned about Elon Musk's political leanings. Since Craig mentioned retail investors, I figured I'd go ahead and give this article a read. Retail leaderboard. Individual investors keep buying Tesla, tech, AI stock. Individual investors' net purchases of US stocks and ETFs stalled last week, but they kept buying certain favorite picks, according to Vanda Research. Tesla, Amazon.com, Apple, Nvidia, and Advanced Micro Devices once again topped Vanda's list of single stocks with the highest net flows from individual investors in the past week.
More EV players join in on Tesla's charging tech, but Jenny Horn, the shares are little changed. Guess maybe this story doesn't pack the same surprise anymore?
Yeah, Oliver, I feel like this is just the latest of the companies that are now joining their North American charging standard. Of course, that is Polestar. This will go into effect 2025, similar to the other companies we've heard from, those being Ford, GM, and Rivian. And Polestar is relatively a smaller company, so I think this is less impactful overall when you're a behemoth the way Tesla is now. But definitely good news, and actually it seems like the good news could keep coming, as we did get reports that indicated that the company may have achieved a strong second quarter in Australia, which is one of the several countries where it recently scrapped the option to order either the Model S or the Model X, of course, their higher end models. Now, according to this report, Tesla sold out of its new inventory in the country with fewer than 20 vehicles remaining available for purchase nationwide. Why this is so significant is because Tesla did experience a pretty major inventory buildup across all of its vehicle variants earlier this month, including even its Model 3 with rear-wheel drive. However, the recent clearance of its inventories can be attributed to the fact that they're offering free supercharging for select Australian models, although, again, a relatively small market, perhaps why we're not seeing this news drive shares up into the end of the day. But additionally, we did get weekly vehicle insurance data from China that suggested that Tesla could achieve record quarterly sales in that market, which is much more crucial for the success of the overall company. So that, to me, is definitely more meaningful here. Tesla's also expected to announce its global second quarter delivery figures on July 2nd. So we are seeing the street consensus calling for around 450,000 vehicles. That's always a critical day. To me, that's almost like an earnings type event catalyst for Tesla shares. That is obviously next week. So we have that to look forward to here. Tesla, a clear outperformer on the year, still up on 108% year to date. A name that has been on an absolute tear, but with the overall choppiness in the market is now settling on the week slightly lower.
Okay. Yeah, it's I guess if this is a losing week, for Tesla, then it's actually kind of a winning week. Like if this is the response to the shares when it stops going up, it's a lot better than going down. Tesla stuck at 250, 260. I don't think that's going to make anybody too upset. And I guess it depends on how long you've owned it, though. Kathy Wood at the ARK Fund is continuing to dump their Tesla.
It's expected that they're going to buy and sell shares. Oh no, ARK has lost faith in Tesla? No, it's cyclical. They will turn around and buy more shares as their strategy dictates. It will continue to remain the largest position in their fund. I mean, the stock's up over 138% year to date. In conclusion, Dan O'Dowd has his panties in a twist, Ross Gerber getting savage, Craig Irwin continues to remain bullish, yet bearish at the same time. More companies converting over to the NACS, not surprising. Strong showing in Australia, most likely China as well. The retention rate of Tesla customers has to have the rest of the automotive industry walking on eggshells. Well, that's all I got for you today. Be easy. Peace.